Open your closet right now and look at that one jacket you haven't worn in a year. Is it vintage or just old? What if I told you that jacket isn't just clutter, but actually a $500 savings account with a zipper? It sounds wild, but the numbers don't lie. We are living through a massive shift in how we think about the stuff we wear. In just the last 3 years, the global secondhand apparel market has exploded by 58%, reaching a staggering $289 billion. This isn't just about people looking for a bargain at a local thrift shop. It's a full-blown economic movement. Take Gen Z and Gen Alpha, nearly half of their wardrobes are now secondhand. For them, a hoodie isn't just clothing, it's a tradable asset. They are treating their closets like a stock portfolio, and it's honestly brilliant. Have you noticed this at thrift stores lately? Everything feels more like a high-stakes trading floor than a dusty shop. So what happened? Why did your old clothes suddenly become inventory? It's because the world of new clothes is falling off what economists call the quality cliff. To understand why your old denim is suddenly gold, we have to look at why new denim has become, well, kind of terrible. Have you ever bought a shirt recently, washed it once, and watched it basically dissolve? That's the quality cliff. Major fast fashion brands have shifted to ultra-low-cost synthetic blends that just don't last. In fact, the durability index for new fast fashion has dropped by 25% in just a couple of years. Economists are now calling it slop fashion because new stuff is getting worse. Real quality items, heavy cotton, real leather, items built to last, are becoming grails. These grails are holding their value like crazy. Some items retain 82% of their original price years later, which is a better return than most cars. But there's a problem. How do you know if that vintage jacket is a high-quality grail or just a really good fake? This is where technology steps in. We're seeing the rise of blockchain-linked digital product passports, or DPPs. Think of it like a Carfax for your clothes. You scan a tiny chip in the collar, and boom, you see exactly when it was made and its full ownership history. It proves authenticity instantly, allowing these clothes to be traded on digital exchanges just like stocks. When you can prove an item is real with one tap, it becomes liquid. You can sell it in minutes. Next time you're about to buy something flimsy, ask yourself, is this an investment or is it just slop? If everyone is busy flipping their wardrobes for profit, who's actually making the most money? Spoiler alert, it's the toll booth operators. These are the platforms and authenticators who have turned reselling into a massive subscription model. Every time that $500 jacket changes hands, a platform takes a cut as superfakes get better. The need for human experts has skyrocketed. Authentication fees have jumped 40%, often hitting $35 per item. These companies aren't selling clothes, they're selling trust. And the brands aren't sitting on the sidelines anymore. They've launched resale as a service, or RaaS. Big-name retailers now have pre-loved tabs on their websites. They'll buy back your old clothes for store credit, which they use to sell you new clothes. It's already a $12 billion industry. They've turned your closet into a revolving credit line where they make a fee when you buy and a fee when you sell back. The secondary market is actually growing faster than the primary market for some brands. But while this might feel like a weird 2026 glitch, the truth is that we've been here before. History has a funny way of repeating itself, especially when the cost of living starts to skyrocket. Back in 1943, during World War II, there was a campaign called Make, Do, and Mend. Fabric was rationed, so people had to repair and resell everything. Back then, it was driven by physical scarcity. Today, it's driven by quality scarcity. We have plenty of clothes, but we don't have plenty of good clothes. That's why the archive portfolio movement has taken off on social media. But there's a flip side to this trend. Some economists, like Dr. Nouriel Roubini, are warning about a closet bubble. He argues that the moment AI fakes become indistinguishable from the originals, the authenticity premium, the extra money you pay for a real brand, will collapse. If a $100 fake looks and feels exactly like a $1,000 original, why would anyone pay for the investment piece? Furthermore, some critics say the archive portfolio is a trap that justifies spending way too much on assets that still degrade. Unlike a real stock, you can't spill coffee on a share of Apple and watch its value drop by 50%. It's a gamble. So, is your closet a gold mine or a bubble waiting to pop? Some of this is hype, but the shift in mindset is very real. We are moving from being consumers to being shareholders of our own lifestyles. It's about the math behind the look. So, what's the roadmap for your wallet in 2026? Here's the practical takeaway. Every time you go shopping, stop asking if it looks good on you and start asking if it looks good on your balance sheet. Think about stored value. If you spend $100 on quality apparel, you should look for items that retain at least $70 in resale value. That's a liquid asset. Stop buying disposable slop that ends up in a landfill after 3 months. Instead, look for the grails and items with those digital product passports. In this economy, your paycheck might feel smaller, but your net worth could be hanging in your closet. We are seeing a $5 trillion shift toward this portfolio mindset. It's about being smart with the money you've already spent. Next time your bill is higher than expected at the checkout, remember, you're not just buying a shirt, you're buying a stake in a global commodity market. Are you gonna go through that spring cleaning pile a little more carefully today? I'm genuinely curious if you found a way around the rising costs of new clothes. At the end of the day, what you wear says as much about your bank account as it does about your style. Next time you shop, don't just check the mirror, check the secondary market floor price. Your future self might thank you for it. Thanks for watching.